Hello viewers, hope you are doing great. Today I will be taking two main topics and the contents are as follows. First we will discuss accounting equation. This equation is important because we record every transaction on the basis of this equation. And second, I will show you some important journal entries for different situations. So let's start. Now first I will tell you why accounting equation is important. Accounting equation is important because the entire system of double entry bookkeeping is based on this concept. So, what is the meaning of accounting equation? The accounting equation is based on the concept that for every debit there is an equivalent credit. Now, I will explain you the meaning of this line. The proprietor brings capital into the business out of which the business purchases assets for its use. What is the meaning of asset? Assets are the things which may either be sold or converted into cash or which may be used later for long time. For example, land, building, furniture, machinery, stock, debtor, bill receivable, cash at bank, cash in hand, etc. So it can be said that when the owner invests money into the business, that is known as capital, and the business purchases assets from that amount, then capital is equal to assets. But at this point, one thing is missing. In case capital contributed by the owner is insufficient, the business takes borrowing from outside source or from outside party which has to be paid sooner or later, and these are known as liabilities. So it can be said that the total of the assets is equal to the obligation because capital is also an obligation and liabilities is also an obligation. The reason is business borrows amount from the owner and business borrows amount from the outside source. So capital is the amount which the business borrows from its owner, and the liabilities are the amount which the business borrows from the outside source. When we combine both the elements, that is capital and liabilities, we should get the total amount of assets. And this is accounting equation. We prepare balance sheet on the basis of this accounting equation. If the left hand side is equal to right hand side, then it can be said that the transactions are recorded correctly. In case the amount of capital is missing, it can be calculated as capital equals to assets minus liabilities. When we deduct the amount of liabilities from the total of assets, we get the amount of capital. Now I will explain this equation with the help of an example. Suppose Mr. A has started business with a capital of rupees 60,000, that is Mr. A has invested an amount of rupees 60,000 into the business, then automatically the firm will get an asset in the form of cash of rupees 60,000. Thus, it can be said that the amount of capital, that is of rupees 60,000, is equal to the amount of an asset in the form of cash of rupees 60,000. So, LHS, that is left hand side, is equal to the right hand side. If firm purchases furniture of rupees 20,000, then there will be no changes in the capital column. Capital will remain as it is, that is of rupees 60,000. There will be changes in the cash column as the cash will decrease as the firm purchases furniture by giving cash. So automatically cash will decrease by rupees 20,000. Now the new amount of the cash will be 40,000, and in the assets column furniture will be shown for rupees 20,000. But when we do the total of right hand side, we get the amount equal to that of capital. Capital is for rupees 60,000, and when we do the total of right hand side, we will get cash of rupees 40,000 and furniture of rupees 20,000, that is equal to rupees 60,000. Now if business borrows rupees 15,000 from a bank, so rupees 15,000 is a liability. As per the accounting equation, capital plus liabilities is equal to assets. Capital is of rupees 60,000, that will remain same. Now a new item will be added with the capital That is bank loan, and bank loan is a liability. It is an obligation which the business has to pay sooner or later. As the business receives cash from the bank of rupees 15,000, automatically cash will rise by rupees 15,000. Now the new amount of the cash will be 55,000. 40,000 plus 15,000 equals to 55,000. And the amount of furniture will remain as it is, that is of rupees 20,000. Left hand side is 60,000 plus 15,000, that is rupees 75,000, and the total of right hand side is 55,000 plus 20,000, again that is rupees 75,000. So as per accounting equation, both the sides, that is left hand side and right hand side, both the sides should be equal. That is the total of an assets column should always be equal to the total of capital and liabilities column. As we are done with accounting equation, now I will tell you some important journal entries for recording any transaction and show the importance of accounting equation and how accounting equation will help to record any transaction. So let's start. Our first entry is opening entry. In case of going concern concept, at the beginning of the year, new accounts are prepared, new books are opened, and the balances of the previous year are brought forward in the new books. The entry for this purpose in the books is called opening entry. Opening entry is recorded by debiting all assets and crediting all liabilities including capital. If the amount of capital is not given, then this can be calculated with the help of accounting equation. As per accounting equation, capital plus liabilities is equal to assets. But if we want to calculate capital, in this case, capital will be equal to assets minus liabilities. When we deduct the amount of liabilities from the assets, we get the amount of capital. Now let's have a look on opening entry, how it is recorded. Opening entry is recorded as follows. It is a format of journal and we record every transaction in the format of journal. As I have already given a detailed explanation about journal in my previous video, you can watch that video. Under opening entry, we debit all the assets account and we credit all the liabilities account and capital account. These are some of the examples of assets. It can be any type of assets. But here I have taken cash account, debit, bank account, debit, stock account, debit, debtors account, debit, building account, debit, and or it can be furniture account, debit, or machinery account, debit. So assets can be of any type. Now we have to credit the liabilities. We use the word to for crediting liabilities. To bills payable account, to creditors account, to loans account, to outstanding expense account, or any other liabilities account. Finally, to capital account. After that, we write down a narration. Narration is nothing but a brief explanation of the transaction, and we use the word being before starting narration. So here the narration for this transaction is being the opening balance of assets and liabilities brought down. Now let's have a look on how to record journal entry for trade discount. Trade discount is usually allowed on the list price of goods. It may be allowed by producer to wholesaler or by wholesaler to retailer for purchase of goods in large quantity. It is not recorded in the books of account and entry is made only with the net amount paid or received. Let's understand this with the help of an example. We purchased goods of list price rupees 9,000 at 15% trade discount from X on credit. Now, how to calculate the amount of trade discount? The amount of trade discount can be calculated as follows. 9,000 multiplied by 15 divided by 100 and we get the amount equals to 1,350 rupees. So how to calculate the net amount? The net amount can be calculated as under when we deduct the amount of trade discount from the amount of list price, we get the net amount. So the amount of list price is 9,000 and the amount of trade discount is 1,350 rupees, and when we deduct the amount of trade discount from the amount of list price, we get an amount 7,650 rupees, which is the net amount. Record an entry with this net amount. Entry for trade discount can be recorded as follows. Purchase account will be debited and Mr. X account will be credited. Mr. X account will be credited because Mr. X is a giver. So as per the rule for personal account, debit the receiver, credit the giver. So Mr. X is a giver. So Mr. X account will be credited and purchase account will be debited because goods are coming in. So as per the rule for real account, that is debit what comes in, credit what goes out. Goods are coming in. So purchase account will be debited. At the end, we have to put a narration that is being goods purchased at 15% trade discount less list price. Some other journal entries for different transactions are goods distributed as free sample. Sometimes business distribute goods as free sample for the purpose of advertisement. Advertisement account will be debited and purchase account will be credited, as advertisement is a kind of expense for the business because business is distributing goods for free. So the rule for the nominal account will be applied on the advertisement account. So as per the rule for nominal account, debit all expenses and losses, credit all incomes and gain. Advertisement account will be debited because advertisement is an expense for the business. Purchase account will be credited because the rule for the real account will be applied on the purchase account because goods are going out. We have to put the narration being goods distributed as free sample. So our next journal entry is interest on capital. Interest paid on capital is an expense. Therefore, interest account should be debited, as the capital is the amount which the owner invests into the business and the interest paid on that amount is an expense for the business. So interest on capital account will be debited and capital account will be credited. As per the rule for nominal account, debit all expenses and losses, so the interest on capital account will be debited. At the end narration, we have to put the narration that is being interest on capital paid. Some other journal entries for different transactions are interest charged on drawing. When the businessman withdrew cash or goods from the business for his personal or domestic use, it is called as drawing. Drawings reduces the capital as well as goods or cash balance of the business. So interest charged on drawing is an income for the business. So interest on drawing account will be credited and drawing account will be debited. As per the rule of nominal account, debit all expenses and losses, credit all incomes and gains. So interest on drawing account is an income for the business. So interest on drawing account will be credited and interest on drawing is applied on drawing account. So the drawing account will be debited and at the end we have to put the narration that is being interest on drawing received. So our next journal entry is for depreciation charged on fixed asset. Depreciation is the gradual or the permanent decrease in the value of an asset, and depreciation is a loss or an expense for the business. The depreciation can be due to any reason. It can be wear and tear or change in technology or damage to an asset. And the entry for the depreciation on fixed assets is as follows. Depreciation account debit to assets account because depreciation is expense for the business. Depreciation is applied on assets account. It can and the assets can be of any type, that is plant, machinery, furniture, anything. So the account of asset will be credited and the last narration we have to put the narration that is being depreciation charged on assets. So our next journal entry is for bad debts. Sometime a debtor fails to pay the amount to the business and the reason may be anything, that is he may become insolvent or he may die. Such irrecoverable amount is the loss for the business, and to record this transaction following journal entry will be passed. Bad debts account debit to debtors account. Bad debt is the loss for the business, so as per the rule for nominal account, bad debts account will be debited and debtors account will be credited. And after that we have to put the narration, that is being debtor failed to pay the amount. And our last journal entry is for bad debts recovered. When any amount become irrecoverable from any customer or debtor, his account is closed in the books. If in future any amount is recovered from him, then his personal account will not be credited because that does not exist in the books. So the following journal entry will be passed. Cash account debit to bad debts recovered account. Because cash is coming in, so the rule for the real account will be applied on cash account, and the bad debts recovered account is a gain for the business, so bad debts recovered account will be credited as per the rule for nominal account. And after that we have to put the narration, that is being amount of bad debts recovered. So we are done with our today's session, and there are many more journal entries and I will cover them in my next video. After that I will start with practical portion of accounts as I am going step by step. If at any point you considered my video was useful, then please to subscribe my channel. Hit the bell icon so that you will be notified whenever I upload my new video, and share as maximum. Do stay tuned for my next video. Until then, goodbye, take care, thanks for watching.